Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, we're going to keep it a bit short today with less names because hopefully most of you know at this point that the theme of the video is going to be when oil and the S&P 500 bounce, the sector will bounce as well. That being said, on these bounces, we're just going to be looking for daily lower highs to be set as we are in downtrends on the daily time frame. A lot of names are in uptrends on the monthly time frame, but it takes a while for those higher lows to develop. So, me personally, I'm looking to enter some longer term positions. You see fear all over the place. This is when social media comes alive with everybody bailing ship. If you're selling now, you're doing it wrong in my opinion. The time to sell was into strength. The time to sell was when your stop loss levels were triggered. The time to sell is not when you open up your account for the 5th day in a row and are sick of seeing red and then you decide to pull the trigger, because that's when you're reacting to emotions and that's when you're going to be selling near the lows. This is when I'm calling up friends who don't trade and saying, hey, maybe it's time to start establishing a long-term position in some of these names. And that is because sell into greed and buy into fear has played out time and time again in all these cycles, in all the markets, but specifically in the MJ market. That is the norm. So fear is picking up. I would say fear in the MJ market is more significant right now than fear in the overall broader market. S&P 500 is not seeing anywhere near as much pullback as these names are, and some of these names started pulling back a couple weeks before the S&P 500 started as well. So I have started to build a longer term position in CGC, and how long, I don't know. If you watch the cron play that I've been laying out, that I exited a few days ago or a week ago, I'm looking to do the same thing. So in my longer term retirement portfolio, I am looking to scale into CGC. I made an initial entry today, pre-market just under $40. I then day trade flipped it. With that little flip, my cost basis for my entry today was in the lower 39s. I'm very comfortable with that entry for a number of reasons. Number one, I'm intending on adding more. I have cash set aside to add on any further weakness. The daily RSI is on the verge of oversold, and the 4-hour RSI is down at 20. So we scroll back historically and say, okay, what happens when the 4-hour RSI on CGC drops down to 20? And if you look historically, we can go back to 2018 here, so about a year and a half. Every single time it drops down towards 20, there is a significant bounce from those levels. So what my game plan is, and what it was on Cron, is to establish my position, scale out into some oversold bounce strength, knowing that CGC is just going to form a daily lower high once we do start bouncing, because anything under 45.78 is that lower high. And then I will scale out some position into profit and hopefully get my cost basis to a point where I can put my stop below the low and mark that at break even. So, just as a rough example, let's say I enter one position at $40 and another position, let's lay out multiple scenarios. I enter at $40 and we don't see any weakness tomorrow and the bounce gets started. The bulls make their way up over the next couple of days. I sell, let's say, half of my position at 41.50. That then anticipates a lower high is coming. 41.50 off my cost basis would lower my break-even point to 38.50, and I could put my stop loss just below the low of 38.38 to have a very small risk on that trade. Scenario number 2, we're not done pulling back yet. I make my first entry at $40. I have a second entry lined up for if we drop down tomorrow under 38. I have a third entry for if we don't see a daily bounce and we drop down to 36. Let's say I get filled out of two out of 3 of those. My average would then be 39. And if the oversold bounce gets going, I scale out perhaps at 40.50. My cost basis and break-even point is then at 37.50. So that's what I'm looking to do. I am in one of a possible 3 positions. And it all depends on how aggressive the bears are going forward as to how aggressive I'm going to be scaling in. So, CGC had a nice little oversold bounce today. The day trade that I took was on the break of 39 psychological. I made my entry and I sold too soon, but that was knowing that I had a longer term position that I had already entered as well, and I just wanted to lock in short-term gains on this position. So I had an average under 39, and I sold in the lower 39s on this initial bounce, missed the secondary leg up, but once we pulled back and hit a new low of the day, I was certainly glad that I took profit when I did. So on the hourly time frame, RSI levels cooled off with that bounce first thing in the morning. We've been grinding along this 30 RSI level for about 2 days, and it will get oversold if we drop down to lower lows tomorrow. And again, we'll be at extreme RSI levels on that 4-hour time frame. Play around with all different time frames. What's the 12-hour RSI on CGC? Currently, it's down, oversold, at right around 20. When is the last time that the 12-hour RSI has been down around 20? It hasn't happened in a year and a half. So again, these things have me confident to begin scaling into a position into the face of fear, knowing that it will require oil and SPY to bounce in order to see the sector bounce. Cron dropping down to lower lows, so pleased with my exit with the daily uptrend being lost at 1517, knowing that the monthly higher low was likely not established at that point. So we're still looking for a monthly higher low. We're down to the monthly 12-period exponential support where we bounced in the past, and with this new monthly candlestick opening, it dropped a little bit from where it was. Or actually, it just didn't rise. It just traded sideways. So we are now on top of that level, and we'll see if the daily oversold bounce. Not quite oversold yet, but a lot of other names are in the sector. But we'll see if this bounce. Again, we need a daily trend change as step number 1 to give an early indication that the monthly higher low has been established. And then from there, a weekly trend change to have us confident. But if you are all cash, this is a sign, or I should say a site of beauty. If you are looking for entries, you want to see weakness, you want to see fear. That's the best time for buying. The best buying opportunity in the last 12 months was December, when the market was falling and collapsing, and literally the moment before the bounce started, fear and despair was at an absolute peak. And it's literally the change that occurs. It just is it's a flip. I imagine the poles of the earth just reaching a point where they all of a sudden flip like that. And that's how quickly the change in sentiment goes from fear to the bounce, and then everybody wishing that they had loaded up into that fear. And then here we are again into fear, and those same people are going to be wishing they loaded up once the actual bounce to form monthly higher lows actually happens. All this being said, if the market were to tank, I mean, if the market's not tanking right now, it's pulling back, yes, but we're not dumping anywhere near to the degree that we did in December. And with everything that's been hitting this market as far as headlines go, if we're not dumping now with all these headlines, that's why I'm looking for bounces, is because, in my opinion, compared to the headlines we are currently seeing, the market's doing a pretty good job of holding up overall. We knew we were due for weekly consolidation. Yes, it's happening a bit accelerated, but I don't see any major red flags in the market, and volume is one of the major things that I'm looking for. And look at the volume on Cron. What does this monthly volume tell you? Bull volume on the way up, declining bear volume for 3 months, looking for a higher low to form. That tells me to start scouting for an entry. So if we see a bear break of 1351, the next support level that we're going to be looking at on Cron is down at 1275. And I want to be very clear about something. Long-term position doesn't mean don't have an exit plan. If you're entering a long-term position, you need to have a stop loss on that trade. You need to have a dollar level where you say, okay, if I go down this much in this position, I'm going to exit, or just a hard price line where if this level hits, you're back to all cash. And if that is something that you are adhering to, look at this pullback, 1547. Let's say you started to get in this bounce, hoping that this oversold bounce was going to mark a more significant recovery, and you got in at $16 and ended up stopping out at 1547. You might think, oh man, I just made a solid loss. I'm now down 3% on that position, and I just took that loss. Well, here we are at 1358. That is over 10% cheaper, and you would have cash to be able to take advantage of that. So getting stopped out, even if it's at a loss, is not always a bad thing, and it certainly prevents from bag holding. ACB dumping, free fall. So the next support on ACB, let's look at the longer term. We look at the monthly time frame. Equilibrium still setting up. Low, high, higher low, lower high. Scouting a higher low compared to 458. Tons of space where we can keep pulling back within this range. The next weekly support is 666. The daily RSI is oversold at this point. and we are looking for a short-term bounce with the sector. And everybody in this sector, when we get a meaningful S&P 500 bounce, not just a weak little green day, but multiple days in a row of bounce, we should see these MJ names go a solid 10%. You know, if ACB drops down to $7, a bounce back to $7.70 is certainly not a very tall order to fill, which is why, again, I like to scale into weakness. The more oversold time frames, the better. ACB 4-hour RSI being down in almost single digits, I might be interested in ACB tomorrow, and I wasn't until I looked at this chart. APHA, still holding support, 638. Actually, I take that back. We did just break that. So dropping to a lower low. The downtrend on the daily time frame continuing. We're looking for a monthly higher low to form compared to 375 to form an equilibrium and tightening range. No sign that that has formed at this point. And I don't like APHA right now because it's not in the same scenario. Again, I want to see, if I'm scaling into an oversold bounce, I want to see as extreme as possible. And APHA, because of that bounce, is not extreme. The daily RSI is not oversold. The 4-hour RSI is just getting oversold. But with CGC and ACB and other names more beat up, I want to play the more beat up names because those bounces potentially will have better follow through. TLRY is getting crushed. Bringing up TLRY right now because when we do bottom on TLRY, a 50% move should be fairly easy. Now the question is, when is the bottom? And I'm not going to even pretend to try and predict when that is because there's a lack of support where we stand. So RSI levels go out the window to a degree because the RSI levels can get more extended due to the lack of support. So the next support I'm looking at is down at 31.45 and then 24. So I'm not going to be trying to play this bounce. It's extremely high risk, high reward. We're in free fall, but when we bounce, and I was saying this, I mean, it's the same thing in cryptocurrency. We saw the same thing happen. It's just on a shorter term time frame with scale. But if you look at, let's actually overlay Bitcoin. We'll do it real quick here. It does look very similar to the euphoric run and then the pullback that we had in cryptocurrency with what TLRY is doing. But look at this pullback. Huge bull move, over a year of just downtrend. Everybody was full despair mode. Everybody was bummed out. And during that analysis, I said, when Bitcoin bottoms, we're going to see a 100% move. And that has already played out at this point. But look at that chart and look at TLRY and look at those similarities. This is an absolute clear market cycle of euphoria and greed into fear and despair. And when we bottom, again, 50% easy. It's just a question of when, and it will depend on the broader market and a lot of other conditions. But there's going to be some nice bounces out there eventually. OGI, lower high and lower low. The daily uptrend has been lost. The bearish reversal head and shoulders pattern being confirmed. So the weekly time frame is now seeing more significant follow through. 666 is a support level here as well, and then 617. I would say 617 is the most important for the weekly uptrend. If we hold 617, I consider that keeping the weekly uptrend, so it's worth keeping an eye out for the bulls to bounce and form a weekly high or low, keeping in mind that all these names are just going to form daily lower highs. Anything under 789 is a daily lower high for OGI. So what I'm going through this analysis right now, you can see I'm not really pointing out specific levels. RSI goes out the window to a certain degree. It definitely factor it into my analysis, but in terms of knowing when the bottom is, it's not going to help us too much. And support levels go out the window because OGI's support isn't going to matter much if the entire sector is pulling back with the entire market. It's going to be the market and oil that dictate when we bounce, not an individual name's individual support. So looking at key resistance levels on the hourly time frame is worthwhile because you can see when we're in a downtrend, when we're in an uptrend, whether the bounce has followed through or not. But in terms of looking for entries based off support levels, these support levels are meaningless if the market doesn't bounce, in my opinion. So it goes out the window to a certain degree as far as playing off of previous price history goes, and it just is up to the market gods as a whole. Hexo pulling back. We had the bear break of the equilibrium on Friday. We followed through today with some lower highs and lower lows. The weekly time frame still in an uptrend. Anything above 588 keeps the higher lows intact. And the daily time frame, if we were to drop down to oversold and towards $6 in the next couple days, it's worth a bottom fishing play off 588. So I am definitely noting price levels to note where trends are. and I would much rather play a daily oversold bounce on a name that's in a weekly uptrend as opposed to a name that's not in a weekly uptrend. But for different reasons, I'm choosing CGC, the reason being liquidity and ability to play with much larger positions than I can on a lot of other names. TRST. Bears in full control, lack of support. 594 is the next level. What does the monthly time frame look like? Bulls have to hold 594 for a monthly higher low to try and keep an equilibrium. So a bunch of monthly time frames that we've looked at this point, all looking the same in tightening ranges. If we form monthly higher lows this summer, and again, in my opinion, the sell in May and go away rhyme is not going to be ideal. It was sell in April into strength and buy in June into weakness. In my opinion, that's probably going to play out. That's what I'm looking for. But if that does play out and we do form monthly higher lows in the summer, then we're going to be looking for monthly lower highs to be forming in the fall. Let's say we get a bull run into edible legalization in Canada, or whatever the catalyst, whether it's in the US or just a strong market recovery, whatever the reason, if we form monthly higher lows, we're going to be looking for monthly lower highs and tightening ranges probably into 2020. Let's just use this as an example, or let's just go to, we'll use this. So let's say we do form a monthly higher low now, let's say June, and we start to bounce, then we would look for a monthly lower high to form sometime into October. And then if we pull back and look for a higher low into the new year, again, I don't ever base trades based on this long looking out, because the longer we look out, the less likely we're going to be correct just because we have less information. But I do see a potential scenario where if we do get bounces this summer, we are going to be looking for tightening ranges into 2020 and then potentially breaks of these monthly ranges, giving some really nice opportunity, whether it's long or short, for some more significant follow through. So again, just to touch back on ACB at this point, as just a really nice tightening range, looking for a higher low. If we form a higher low this summer compared to 485, which I anticipate we will, I do not foresee that we're going to drop 34% further from where we stand in the next few months. So we're looking for that higher low. We'll look for a bounce into the fall, and we'll look for a tightening range into the new year. And it just, that is the most clear for me with what these setups are giving us at this point. So the U.S. sector still getting hit hard. The Illinois news didn't do anything because, in my opinion, the market correlations are more important than an individual state legalizing. If we had seen S&P 500 green 1% today, I believe that the USMJ sector would have seen some significant gains. But as soon as we saw the S&P 500 get beat down, we had some green in the USMJ sector to start first thing, and that got beat down as well. So Cura, we're looking at the weekly time frame. We're losing the higher lows. We're in monthly consolidation mode on Curaleaf. There's two setups for the majority of MJ names. There's monthly equilibriums and there's monthly uptrends. So on a name like Curaleaf or Cron, we're looking for monthly higher lows, and because of the size of the pullback, we will likely form monthly lower highs once we do bounce, but it's not an equilibrium setup, so it's important to distinguish between those that are coming off the highs and those that are coming off of lower highs, with those coming off the lower highs being the equilibriums. So we are almost oversold on the daily. We're right there. 10 psychological, and then there is a gap to fill at 923. If we were to fill that 923 gap anytime this week in the next couple days without seeing any daily bounce follow through, I would absolutely be interested in an oversold bounce at those levels. Hourly RSI, pretty beat up. 4-hour RSI, getting beat up. So a flush of $10 tomorrow on watch. I'd be shocked if we dropped 8% to fill that gap, but I would be very interested in that bounce if we did. Anything on the daily chart under 1304 is just a lower high, and on the hourly time frame, anything under 1160 is just a lower high. So again, use those hourly time frames to determine, is this just a weak bounce cooling off short-term RSI levels to allow for another leg down, or are we changing hourly trends to see the bounces start on the daily time frame? IAN held up a little bit better than most, but still a bit weak today with the higher open. I'm watching the 4-hour time frame for the potential of an inverse head and shoulders pattern, with this being our left shoulder, this being our head. Our resistance is 569 and 561. The bulls have to show up tomorrow to form a right shoulder and then try and break the lower highs perhaps Wednesday in this pattern. If we're going to see the daily momentum shift, we certainly know the daily momentum has been in full control of the bears I have no interest in entries. I do have my long-term position playing based off of the anticipation of a monthly higher low forming compared to 450, but I have also been managing that position with playing these oversold bounces on the way down and lowering my cost basis to remain comfortable. I don't like any entries at this point just because we're not extreme. We're not seeing the bears in control right now, pushing the price down into oversold bounce levels. If I were going to be looking to make any additional entries at this point, it would be on a break of that trend, perhaps on that 4-hour pattern that I just pointed out. TRUL, also seeing weakness today, dropping down. 4 big dump days in a row. Weekly time frame, lower highs and lower lows in the downtrend. And the monthly chart, equilibrium. High, low, lower high. Scouting the monthly higher low compared to 910. Tons of space for that monthly higher low to form. No indication that it's formed yet. And on the daily time frame, anything under 1807 would just be a lower high on a bounce. CL. So CL has been trying to build a base and they've been struggling to get any follow through, not surprising because of the sector, or the market, I should say. 1601 and 1626 are key resistances, and the bulls are trying to defend the $13 range, but we have to see the market bounce. I'll be very curious to see how a name like CL and OH, which are holding on much better than the names that are dumping, I want to know who's going to see the bigger gains. Is it going to be the names that flushed and now get a V-shaped bounce, or is it going to be the names that are holding on stronger and did not pull back as much? Look at that monthly time frame for CL. It's still very healthy overall, and we're just looking for the monthly higher low to form. So for CL and OH, they're in the category with Cron, looking for a monthly higher low, not in an equilibrium setup, just a bit different overall. ZYNE, pulling back with the market, getting extreme, closing down at the low, still in a weekly uptrend, not losing sight of that. We're looking for a weekly higher low to form, and daily oversold conditions would be a good time to start looking for a weekly higher low to form. 957 is support after 10 psychological, and again, a bounce anticipated when the market does bounce. So for me personally, again, I'm not telling anybody to do anything. I never tell anybody to buy or sell anything. Everybody has to make their own decisions, but this is the kind of market environment where I'm telling friends and family who are not familiar with trading to potentially be looking for some entries, because I would much rather be making entries in monthly uptrends or anticipating monthly higher lows when we're in daily oversold conditions. And I certainly would never suggest that someone makes entries for longer term positions when we're up at all-time highs and in euphoria. And then you go into the social media realm and you see the people who are clearly not traders that are selling at this point. And again, it's just reacting to their emotions. It's them giving in to being sick of seeing their account down in the red. And it's those people that are the last people. I always look at a chart and say, who is selling with daily RSI 22 right before we're going to be bouncing? If I'm going to be selling, I'm selling into that bounce after a short-term cool-off. But it's just people that aren't experienced or aren't familiar and are reacting to their emotions, and those are the last ones to sell before the bounce gets going. You look down at December and any individual name with the bounce that we saw from December lows, and you know that there were some CGC longs selling right here in the upper 20s, and just like that, I'm certainly not expecting any kind of huge move. I'm not expecting a bounce to the magnitude that we saw in December because the pullback hasn't been to the magnitude that we saw in December. But at least we're looking for daily oversold bounces to set short-term lower highs, and on those daily oversold bounces, we're going to be looking for 5 to 10%, which is certainly nothing to sneeze at. So that's all we got. Stick to the game plan. Again, the message in all these videos is have a game plan established, write it down in front of you so it's concrete, set those stop levels, and eliminate emotion as much as you can from your trading game plan. And you want to be making those game plans when you're in a good mood, so that when you're in a bad mood, you're not making those decisions. That's all I got. We'll check back in tomorrow, keeping an eye on oil and SPY for any kind of bounce, and knowing that even if we do see a bounce on the daily time frame, S&P 500, anything under 280 on SPY is just a daily lower high. The bulls have a lot of proving to do, and a short-term bounce doesn't mean this is it. We can easily see bear flags on the daily time frames out there, so we have to be cautious and protect against that and have a game plan for if that is indeed how the bounces shape up. If we change hourly trends and don't get follow through, we have to be cautious of bear flags. We'll check back in tomorrow and see how it plays out. Have a good rest of your night. Do a good thing.